Thank you very much. I'm excited to be here. Before I start, I want to make sure whatever I convey to you during this period of time is what you want to hear. So if you have any questions, just say, hey Bob, how about this? Or I'd like to know a little bit more about that. So it's really all about you, what you want to get out of this. I do understand that this is Friday before spring break. I will not stand in front of the door because I know if I did I might get leveled as you stampede out of here. But I am excited to be here. A couple of things. We're talking about this banking industry, credit financial services industry. A little bit, again, I've been with the credit union movement since 1973. I started out as a federal credit union examiner. I worked at another credit union for 3.5 years, but I've been with Members First for 29 years. I've been president for 17 years, so I was there about 11, 12 years before they selected me. That's basically what I started as head of the mortgage department over at Members First, then became head of real estate lending, then vice president lending, chief operating officer, and then acting president. And then I was honored to be selected as the CEO following a nationwide search. Credit union, Members First was founded in 1950. I love to tell this story. We initially, credit unions have a defined field of membership. Who can join? We started by 9 people over the Mechanicsburg Navy Depot, 9 people putting $5 into a hat that wanted to form a credit union. As their fellow co-workers wanted to borrow money for a stove or a refrigerator because we couldn't finance maybe a skateboard. We couldn't finance anything real large. They would go around and talk to their fellow co-workers into joining the credit union, or if they had joined, increase their savings account. From those humble beginnings, as was indicated, we're now $2.7, $2.8 billion in assets, 285,000 members with no government money. We're owned by our members. They're our owners. We have no stockholders, which is the same with all credit unions. And as such, we're beholden to our members. We're not beholden to stockholders. We rebranded it. We started as DAFC. We were branded as Members First. And as was indicated, we have 60 branches among South and Central Pennsylvania. As I indicated, credit unions are different from banks. We're a nonprofit financial cooperative. What does that mean? As I indicated, 9 people started out with $5 each, and from those humble beginnings, they built our organization to what it is today. Credit unions started out in Germany with farmers who had money, pooling their money together, and lending money to farmers who needed money. So the farmers that needed money paid interest on their loans, and that interest paid dividends or interest to the people that had furnished the funds. Same today. Owned by our members, that is our key strategic benefit. We can do things for long-term benefit of our members and for our organization, whereas stock-owned companies, stockholders and stock analysts are traditionally looking to maximize earnings. So when you have a period of downturns, they're trying to scramble to boost up their earnings. We don't have to do that. So we can do things for the long-term strategic interest of our membership. As I indicated, banks are for profit, owned by shareholders, so they constantly have this conflict between trying to serve their customers and trying to satisfy their stockholders. And usually that translates into credit unions have better rates, both loans and savings, lower fees, and again, our focus is on what is best for our members, not what is best for our organization. Our strategic plan, I want to spend some time here on this. We've been very successful, and our strategic plan focuses on the main one is the center one, called a key strategic area. That's convenience and service, dependability and trust. We think people want convenience and they want service. They want a dependable partner that's there for them and consistently there for us, and they want to trust us. The convenience, how we deliver the convenience, is what do people want, not what we want. What do people want? People want personal service. and they want convenient access to the money. So that's why we have built 60 branches throughout South Central Pennsylvania. We're not done yet. But we also have all of the electronic services too. It's very important for people to, and we use our branches mainly to acquire accounts, and we encourage members to use our electronic service, and they have. We have the online services, we have the mobile services, telephone services. So that's the convenience aspect. The service aspect is that personalized service that we feel is important. We feel that what is important for most successful companies is building solid relationships. That's what makes the world go round. So we are constantly looking to build solid relationships, not only with our members, but with community organizations like Elizabethtown College, other organizations, community organizations. We think that the companies that focus on building solid relationships are those that are going to be successful in the long term. Extremely, extremely important. And that's the top one indicated there, was this continuing to establish and develop relationships. Our membership satisfaction survey, we do a survey every year. We want to say, okay, how well are we delivering on this? Last year, 96.6% of the respondents said they were satisfied, very satisfied, or extremely satisfied with their products and services. That is a customer satisfaction survey rating that most companies would give their IT for. In 2014, we participated in 277 events throughout the community and spent over 5,500 hours at those events, helping support our communities, helping support our community organizations, and obviously helping us become familiar in the communities that we serve. We have the largest commercial loan portfolio of any credit union in the state, and we rank 7th nationally. In terms of growth is another one of our key strategic areas. We firmly believe that if you're not growing, you're dying. So growth is very, 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 very important to us. Couple statistics here. We have compound growth since 1997, annual compounded growth of just shy of 11.5% per year. Our members have increased about a little over 7.5% per year. As I was indicating, we went from 10 branches when I first started back in 1987 to 60 today. The number of companies that we serve, companies or associations, because our field membership is defined by employees of certain companies or members of certain associations. The companies that we serve in the South Central Pennsylvania numbers over 6,500. We are extremely, extremely aggressive in growing. We're extremely aggressive in building solid relationships with the companies we serve, with the companies and organizations that are in our communities, and with our members. We're proud to say that we went from the 118th largest credit union back in 1997, right before I took over, by the way, sort of self-serving, to the 50th largest credit union as of September of last year. Again, our focus is on our community, and our focus is on earning business and attracting business. And you don't do that by just opening branches and waiting for people to trample down your doors. It doesn't happen. There's lots of challenges in the organization. Again, one of theirs is examining the current business, internal business structure and human capital. We've got to keep this organization, we've got to keep it manageable, we've got to keep it organized, we've got to keep it relevant. We've got to make sure we're delivering the products and services and delivery systems that customers want and need today. What do they want? As I indicated, they want convenience of service. They want the ability to access their money 24/7, but they also want someone that they can talk to, someone they trust. And our ownership structure validates and creates just that. As I indicated, our interest is our members, and it is not on stockholders, but we don't have it. A very key component. Market share, we measure. The other thing that's important with companies is to benchmark your success. How are we doing? Well, we can say, oh, we're doing very good. But we like to look for external factors that says, okay, how are we doing relative to other financial institutions? I'm very proud to say that we look at our market share in terms of total deposits every year. It tells us, are we growing relative to other financial institutions? And our market share has consistently grown. And we focus on 7 counties right now. We started out in Cumberland County, as I indicated, back in 1950. And I'm proud to say we have the 2nd highest market share of any financial institution in Cumberland County. We were first for a while. We're 2nd, and PNC is the one that has the first market share. Again, they focus mainly on commercial accounts, so they would have larger accounts, but we're not too far behind them. Our next largest market area is York and Dauphin. What are we looking for? We're looking for growth. Are we growing market share? Are we becoming more relevant to the customers and the businesses in our 7 counties? And that's proven by how successful are we in attracting members, we call our customers members, and earning their business. And obviously, we've done a pretty good job. So we're constantly benchmarking ourselves against external data. How are we doing? As I indicated, the customer satisfaction survey, membership satisfaction survey, validates how well are we doing. How well are we meeting the needs of our members? So we're constantly looking at that. We moved to here in Lancaster County. I don't know how many people here are Lancaster County residents, but we moved here in Lancaster County in 2010. And I'm very proud to say in 2014, we saw a 62% growth in this county. It's a huge county. It's a new county for us. But we got the right people out there looking to develop those solid relationships with the organizations in the county, again, like Elizabethtown County, and with getting involved in community events throughout the county. I think we're pretty well known, even though we've been here for only 4 years. In that year, 7 of the top 10 largest banks had positive growth, but none was over 8%. But I will acknowledge we started out with a small number, because we had to grow this. We had to grow this business. We do not acquire. Purchase and assumption is not in our business model. We could merge with other financial institutions. We just don't choose to do that as a strategic development. We just don't do that. But we're very proud. We're very proud of what we do bring to the community. A little bit about our organizational chart. I'll go through this quickly. I have 5 direct reports. I think the key is, from a student perspective, what's important in looking at your career paths in the future. I think it's important to find an organization that's growing, okay? As a nonprofit financial cooperative, we don't have stockholders, we can't be bought out. So what's happening in the financial services industry? It's consolidating. It's consolidating. What does that mean? It means there's fewer financial institutions. Since 1991, the number of banks have gone from just slightly less than 12,000 to about 5,700 today. Credit unions too are consolidating. They're getting larger. The small ones are it goes like the mom and pa grocery stores. Of course, most of you don't remember that. In my lifetime, that's what we saw. We went from 13,500 in 1991 credit unions to 6,557 as of the end of last year. The difference between banks and credit unions, credit unions are a little bit smaller. And the average, the assets, there's only 457 credit unions of over $500 million in assets. And the average there was about 1.7 billion. So we're a little bit larger than the larger credit union, but we're not the largest credit union. That's my senior staff. Career opportunity. We've had people join our organization that started out as entry level and worked themselves up to one of my executive vice presidents. Started out as a teller many years ago, and is now an executive vice president. As these consolidations exist in the financial services industry, again, those top-level jobs are the ones that get consolidated. You only need one CFO, generally with a company. So if you have two companies merge, one will survive. That's corporate America. That's corporate America. What career opportunities are there within our organization? We're like a traditional bank, traditional community bank. We have everything from marketing to information technology, human resources, accounting, facility, business and consumer lending is huge, project management. So there's lots of career opportunities with us as well, and we're a growing organization. Something that I would suggest as far as a career path, you need to learn the business. Very few people are going to come out with a degree and get into a management position, whatever department you end up. But it's very critical that you learn whatever business you end up in. And one thing I would say is, and I've said it often, is I will hire people for their attitude versus their aptitude any day. Someone with the right attitude, a team player, someone whose interest is in the organization, good for the whole organization, I will hire them tomorrow. I got on today. I'm looking to replace George. No, not this year. But yes, attitude versus aptitude. So when you go about life, think about how you're coming across to fellow people. How are you developing relationships? Very, very, very important. There's other career opportunities. Like I said, we have all kinds of positions. Complexity in the banking world. Things haven't changed dramatically in terms of the concepts behind banking. As the farmers in Germany found out, okay, people that have excess funds are willing to pool their money together for people that need money. And that's the way it works. It's called interest rate. It's a whole interest rate risk modeling thing. What's happening in the financial services industry with the prolonged record low interest rates, what's happening is financial institutions are being squeezed a little bit. The difference between what we earn on our loans and investments versus what we pay out in terms of interest on our savings and borrowed money, called net interest margin. And with this prolonged interest rate period of time, I'm not going to get into the mechanics of bore you to death because I realize spring break's coming, has been shrinking. So it's very important, as you'll see, that that's affected earnings and created challenges. But what is it about challenges? What is it about challenges? What's important for a business is, if you're faced with a challenge, figure out a way to address it. Don't just say, oh, this interest rate environment is so bad. Or this is so bad. Whatever it is, face it. Face it. And that's what we've done consistently. We haven't looked at excuses. We haven't said, oh, what's so-and-so doing? No. What are we doing? What are we doing to focus on our business, what we're trying to achieve, and how well are we doing it? That's important. That's important. There's all kinds of other challenges in this industry, as well as the interest rate environment, regulations. I can go on and on about that, but it'd bore you to death. But there's more and more regulations all the time. I'm sure all of you have known, maybe have been involved with a credit card breach at some point in time. Happen all the time. Guess who absorbs the costs of fraud on credit cards? or the financial institutions that are issuing the cards. Big, 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 big issue with us, so we're constantly trying to minimize that, although most of those breaches, all the breaches, from our members' perspective, occurred at the retailers where they use their card. Is where that card gets compromised. So that's one of the challenges we have there. Product offerings over the years haven't changed a whole lot. You still have CDs, money markets, passbook savings, lines of credit, car loans, home equity loan. You have the whole thing. What's changed is the delivery systems. And I'm much older than most of you, all of you, I should say. I'm trying to be nice. But the delivery systems have changed over the years. Branches are still relevant. So if you hear or read something that says, branch transactions have gone down in the last 20 hours, haven't. Our branch transactions haven't gone down. But if you divide the number of branch transactions we have by the number of members we have, that has dropped a little bit. Not much. But where's the delivery system changed? Mobile banking. Mobile banking is huge and just exploded out of nowhere. Huge. In fact, the transaction volume with mobile banking has now exceeded our online banking transaction fee. By much. So it's the delivery systems that have changed. In my lifetime, what did I see? I saw ATMs first come on the scene. And when they come on the scene, people were saying, that'll make tellers irrelevant. People won't come into branches. Isn't true? Isn't true? So there's been changes in the industry. We've had to adjust to those changes, but the bottom line has still remained the same. People want convenience and service and a partner they trust. That hasn't changed. And I'm sure there's lots of people that never set foot inside of a branch except maybe to open an account. It's okay, we like that. We like that. But we also like to sit down and meet with our members and talk to them if they choose to do so, to get to know them. To get to know what their needs are and how we can build a better, more solid relationship with them. Because that, at its core, is what our strategic strength is all about. EMV chip cards, you're going to see a lot of that. We're going to be replacing all of our credit cards with chip cards, and that'll be coming out this year. Again, another initiative to try to address fraud. What I've said is the fraudsters lay awake at night thinking about ways of parting people with their money. And if they use that same intellect and energy in legitimate ways, they would be millionaires. But they're always looking for ways to part people with their money. It's our job to try to stay one step ahead of them or right behind them to try to prevent that from happening. But again, we're the ones that will absorb that risk. It's not our customers that absorb the risk. Future outlook. What do I see? First of all, let me say that we, Members First, and the organizations in this South Central Pennsylvania, 7-county area, are very blessed. The economy in this area is solid and has traditionally been solid. And while other areas of the country may have seen huge spikes in terms of unemployment, in housing prices and crashes, we haven't seen that. We never saw the huge buildup of housing prices, so we never had the huge correction that you had in some areas. A friend of mine is a president of a credit union out in Las Vegas. They saw properties drop 60% in value from the peak. A house that you could buy for you bought for $300,000 in 2007 is now about $125,000. It's a challenge. I said to him, I guess you don't do 100% home equity loan, meaning lend someone up to 100% of value. He said, no. So we do. We do. Yes, we saw some drop in housing prices, not much. Unemployment, yes, unemployment went up a little bit, but nothing like some of the states in the country. So we're very blessed, extremely blessed by the economy that we operate in. It's a great place to grow up, it's a great place to raise a family, it's a great place to work, it's a great place to have your career. But it is great. We're very, 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 very blessed in that regard. So what are we looking for in the future? One thing is continued growth. Again, companies that aren't growing are dying. Because cost keeps going up every year. So we expect continued growth. Branch expansion again. How do we grow? How do we get those compound growth rates I indicated? Just by opening branch? The branches push out our market area. As I indicated, we started in Cumberland County, then we went to York County, Dauphin County next, then we went to York County, Adams, Perry, Lebanon, and 2010 Lancaster County. So we kept pushing out our market area. Kept pushing out our marketing materials, our business development efforts followed as we went into each area. So business doesn't come to you by accident. You gotta earn it. You gotta get it. You gotta grab it. You gotta develop those solid business relationships to get that growth. And we have done that. So branch expansion is what we do to expand our market area. And our territory expansion is also some of that. We also are very attuned to technology. What's happening in technology? Debit card transactions have now exceeded credit card transactions, which makes the tie to check. You need a checking account for a debit card. So checking accounts are key. About 98% of credit unions, I'm close, just read that statistic this morning, 98% of credit unions have free checking. Either no fees or if you meet certain criteria, there's 98%. In terms of banks, that is significantly less. I'm thinking like in the 65%, something like that. But you're going to see 38%. 38% of banks have truly free checking. You're going to see that shrinking more because what's happening is that some of the regulations, some of the laws are shrinking some of the revenue sources of banks. So they have got to make up that revenue, again, to appease the stockholders. So banks traditionally like fees, they need fees. They need fees that feed the monster, so to speak. So again, debit cards is one of these technology advances that have really come on strong. Apple Pay. Apple Pay is something we're watching very carefully. Okay? And it's not what we want. As I indicated before, we have to focus on what our members want. One of the technology things that are happening with some banks is that they're installing what's called remote teller stations. So when you come in to do a transaction in a branch, instead of saying hi to a person, a real life person, you stare at a TV screen. Hi, how's your day? Okay, back there. So they're installing these. Okay, why are they installing them? They're more efficient, they're cheaper, okay? Are we interested in doing that? No. Why? Do we like efficiency? Yeah. What did I say one of our core strategic focuses is?
Building relationships.
Relationships. And staring at a TV screen, is that going to build a relationship?
No.
Nah. One of the things we hear from our members all the time when they walk into our branches is, your people are so nice. They remember my name. They remember my dog's name. They give a dog bone to the dog. They give a lollipop to my grandson or son or daughter or whatever. Your people are so nice. Very helpful. Can't get that from a TV screen. Not to the same extent. So while technology is important, we are not about to use technology for technology's sake. We're also not what we call bleeding edge. We're not going to jump on something just because an industry pundit said, oh, you need to do this or you're not going to be relevant. You know what? We're going to think about it a little bit. We're going to look at the consumers. We're going to look at our customers. We're going to look at our members and say, is this something they really want? Or is this just some expert out here thinking that that's the way to go for whatever reason? Usually if someone's promoting something, it's because they sell that product. So the pundits or the experts that are pushing remote teller machines, guess what they sell? Remote teller machines. There's a large bank in our area installing these remote teller stations. We can't wait for them to complete that. Why? We smell opportunity. Where people want personal service, that's what we deliver. That's what we do. There's a large bank here in Lancaster County being merged. I'm not going to name names. We can't wait for that to happen. Why? Because the large bank loves fees. Okay. Loves fees. So when people are subjected to new fees, they get upset. Now they look for alternatives. Hello, the guy in the cape. Come around. Come around. So technology, we're looking at that. We're looking at Apple Pay. There's a new Android Pay that's just been introduced. We're going to be part of that because consumers want that. They want that ability to use their iPhones and just touch it. We're going to be part of that. We're going to be part of that. It's not what we want, because we've got to share some of that revenue, but it's what the consumer wants. It's the most important. As I indicated before, relationships are key. Let me show you one of our TV ads.
Okay, let's do this. Whoa, how'd you get this new phone? I use my member's first Visa card. Plus I get cash back on every purchase.
Awesome computer. How did you afford it? My dad got lunch at Members First, but to help out, I have to do a little tutoring.
So, how does this Facebook thing work?
Finance the things you deserve in your life with a Members First loan. It's fast, easy, and the rates are great. Visit any Members First branch for details.
Now, when we started this advice guide, I'm the advice guy. When we started this, we were a little nervous. We were a little nervous. We're a financial institution. People entrust their life savings with us. They're looking for a trusted financial partner, someone to give them advice. So when we did this with humor, we thought, will this undermine the public's perception of Members First as a viable financial institution? What we found is that the vast majority of people love our advertising because it stands out. It's funny. Conveys a message. Conveys a message. I could stand up there and say, oh, we have pretty jacket. Oh. You got to cut the go. Every once in a while, I'll run into someone that doesn't like our advertising. And it's rare. They'll say, oh, they're selling. Or you're better than that. But you know what? They remember them. Talking about it. We had a survey done a couple of years ago as part of a lawsuit we were involved in. It was a branding survey. And a surveyor from Texas came up to Capital City Mall and showed our logo to people in the mall. Trying to say, do you recognize this company? 94% of the people recognized our logo. And the surveyor said to us, what was even more interesting was that the emotional reaction that came out of it too. Most people would smile, or they say, oh, that's that guy that flies around in a cape. Okay, so have we undermined the public's perception of us as a viable financial institution? No. No. We've personalized it. We've convinced people that we're approachable, personable, we're not stuffy. We're not stuffy. You come into our branch at Halloween time, we're not stuffy. Oh, Halloween. We like to have fun. Our motto is people work to live, they don't live to work. So let's have fun as much as we can. We have to act a certain way sometimes, most of the time, people enjoy personality, they enjoy conversation, they enjoy a little banter. So that's our motto. We like to have fun, but we get the job done. We get the job done. So it was very refreshing. And this surveyor said that this 94% survey rating is unheard of except for national brands. Nike, Coca-Cola, local brand, unheard of. So have we done a good job in getting our name out? Have we done a good job in getting engaged with the community, having great community partners like Elizabethtown College? Reaching out to the consumers in our area, the residents in our areas, the business in our areas? Yes. I think we've done a good job. I think our statistics prove it. We've done a good job. I'm going to show you one more ad.
Mom, the ball's coming to you. Eli, this block. 40 flat, on hit. Ready? Hey!
Come on, Eli, we can do this!
Thanks a nice day.
Touchdown, Wildcat! The Members First help you be a winner. Open an account at Members First today. It'll take your way to a financially healthy future.
We ran that right before the Super Bowl. I think we had 4 ads during the Super Bowl. This was fun to film, by the way. You know, those kids couldn't care less. The parents were, they were like, oh, no, my son's going to be on TV. Kids, oh. Coach, hey, kid, get out of here. You kids in the white jerseys, your offense. Now, miss your blocks. You've done it all year. Guys in maroon, your defense. Now, when you go to tackle Bob, don't tackle him. Of course, a couple bounced off me. Those kids were funny. They were funny. But does that catch people's attention? Does it convey a personal side of a business? That's what we're all about. That's what we're all about. So our motto is, we put our members first. We stand behind it in the service we deliver to our members. We convey it in our advertising. We convey it in our involvement with the community, the support of community organizations, the number of hours our employees spend helping organizations throughout our 7 counties. We convey it every day. We convey it every day. That's it. That's it. Do you have any questions for me? Oh, that was one of our first commercials. When I was, that's when the Nice Guy was being developed. I was actually skydiving. Let me tell you, technology today, I'm afraid of heights. Did I skydive? This is green screen technology. So, but thank you. Any questions whatsoever for me? Yes.
When you move into a new area such as Lansing, do you have to educate your consumers, your potential consumers, about what is a credit union versus a traditional financial institution?
Yes. The question was, when we go into a new area, do we have to educate those residents about what the credit union difference is? Why should they consider us? Yes, we do. In fact, we're part of our Pennsylvania Credit Association, our state trade association has a campaign called I Belong. You might have seen some of the ads from them. Again, you might have seen it with part of the news. I know there was something on WHTM, ABC 27 this week. I just appeared on Fox 43 News yesterday at 6:45 in the morning. And yes, so we're constantly trying to educate members, residents, people, about what credit is all about. The other thing that we have a hard time with is sometimes they think, oh, wait, there's hoops to jump through to join. Or you have to know someone, or you gotta work. There's a credit union for everyone. There's a credit union for everyone. As I said during the I Belong thing at Fox, let's go to ibelong.org. We have, as I said, 6,500 segs, one of which is Elizabethtown College. So all the students, Elizabethtown, can join members first. And as you move away, as you go with your careers, you can keep doing your transactions electronically. So we have it on. That was a good question, very good question. And we hire people that have contacts in the community. So it's not only awareness of the credit difference, but it's also awareness of us specifically. So that's why we do the advertising, that's why we do the community involvement efforts. We're all over it. We're all over it. Great question. Any other questions? Spring break? Other questions? Well, thank you very much. I appreciate